Okay, Courtney is asking the question. I want to start investing in the stock market. Ooh, pretty exciting time right now, late 2020, with everything that's going on. Yeah, exciting time. But how can I diversify my portfolio without ETFs? Oh, interesting question, yeah. So just the other day, I think yesterday, I saw a statistic. I'm not sure where who made it, but it was some US financial company that issued did a study saying that actually the probability of everyone finding stocks that beat the index or that beat the average is like super slim. Like it was a single digit amount of stocks that beats actually the index. So finding them has historically been very hard. We all know that past performance is no guarantee for future results, right? So finding them historically has been very hard. And but if you do, the return that they give you, the return has been all worth it. So I think we all know the Apples, we all know the Amazons or the Netflix or whatever, all these the Facebooks and the Googles, the big FANG stocks, right? I think we all know them, and they have just given you, if you would have started to invest in them early, like in the 90s or the beginning of the 2000s, or even 10 years ago, you would have made an incredible return. But who knew before, right? Now everyone knows, and now everyone's investing in them, but who knew before is the question. So your wish to diversify, what you're asking, but how can I diversify my portfolio without ETFs? The need to diversify, I think is clear now. And it's very, very good that you come from this standpoint, because not diversifying and buying single stocks is just, it's a huge risk. You can win a lot, I get it, and it may be fun, but it's a big risk. And if you want to diversify only with single stocks, then you need a lot of money, a lot of time, and you also incur a lot of trading commissions, of course, because you have to buy and sell a lot of different stocks. And the real challenge here, in my opinion, is that it's not done with buying a diversified portfolio made out of single stocks once. That's not the issue. The issue is maintaining this for years and years and watching these single stocks. We know some will appreciate greatly, some will do okay, and some will go down in value. That's just how investing is. So you need to watch it, because the diversification that you set in the beginning, you will lose it, that's for sure. And then you need to rebalance to come back to your initial diversification, or to whatever diversification that you want that day. And doing this without ETFs or mutual funds is very, very hard and requires a lot of money. So historically speaking, and so with real numbers from stock market returns, and also from personal experience with handling clients, ETFs or mutual funds is probably the better idea for a large percentage of you guys out there than investing in single stocks.